Hello, everyone. Hope everyone is doing well. All right, so today I attended a 2-hour webinar related to all the provisions related to the one big beautiful bill that passed the House and now is expecting to run by the Senate. Hopefully to have another version of it by July 4th. And then we'll see the reconciliation between the House and the Senate and what would be the last bill, what would that look like? All right, so we may have broken down the one big beautiful bill before in another presentation, maybe 2 weeks ago. But just to be up to date with what's going on, I wanted to attend that webinar to see what are the new legislations, what should we expecting, and that triggered in my mind the importance. We cannot stress enough the importance of tax planning amidst all the changes that are expected to happen, and like among all what's being said on the news about this bill, about the expectations, about what the Senate may agree on or not agree on, and all what's expected to come in the next few months. So because as we said in that on the other day about these provisions, some of that go retroactive to January 1st, 2025, something like the bonus depreciation, and some just starts at January 1st, 2026. And this is crucial because it really affects our planning. If we still have 2025 to plan for, because we talked before about the importance of tax planning before the year ends and before it's too late to do anything about it. Something like the clean car credits, it's now set to expire at the end of the year. Of course, if it passes as a law, it's not passed as a law yet, but that's what's in the bill, on the proposal right now that passed the House. We'll see what the Senate will say about that, what will be the revision, what will be the reconciliation between the two, and what will be the final one. But at least it gives you a hint on, okay, if you're considering buying an electric vehicle, you probably need to do this as soon as possible. Or you may not need to rush very much if the bill does not pass. So just knowing this and having somebody on your side helping you what's probable to pass and what not, and what's the expectations out there helps you a long way with your planning. So yeah, I prepared a presentation that I wanna share with you about, again, the importance of tax planning amidst all these changes. We spoke before that tax preparation is like you're looking backward, but tax planning, you're looking forwards. I don't want it to be looking backward as, okay, something happened already, and now I need to find my taxes and be surprised or be hoping that I would get a refund. I want you to be proactive about your tax situation. I want you to be managing. That's what I'm saying here. We want to ensure compliance, yes, but at the same time, we want to maximize your saving. We want to take a strategic approach to manage your tax obligation. Believe it or not, taxes are something that you can manage. Something is you can, in a legal way, manage to reduce. And that's the good news. It's not like you have to pay it and that's it. So corporate tax planning, and I'm talking mainly to business owners, this is a crucial aspect of managing your business financial health. Making a profit is one thing, and keeping it is another thing. Tax planning involves strategically organizing your company financial activity to minimize your tax liability while ensuring full compliance with tax laws and regulations. We're talking about legal strategies that you can make use of to reduce your tax bill in a legal way. Proper tax planning not only help companies avoid the costly penalties, but it also enables them to maximize their saving, reinvest in growth opportunities. I want you to keep more of the revenue and the income that you're generating to reinvest it in your growth and in your business to grow even more. In this presentation, we explore some key strategies that businesses can use to reduce their tax burden while maintaining compliance, ensuring financial sustainability, and optimizing the overall performance. So what's corporate tax planning? Again, corporate tax planning refers to the process of analyzing and structuring your business operations and finances in a way that reduces the amount of taxes owed. You're good in running your business. That's a good thing. But you need to have somebody by your side that helps you to reduce the amount of taxes owed in a structured way that you wouldn't be just surprised. There is a structure and a strategy behind it. That's why it's called planning, strategic tax planning. We want to ensure that the business remains compliant, whether it's local, nationwide, or like international tax regulations, while also taking advantage of tax credits, deductions, and exemptions that are available out there to reduce your overall tax liability. The benefits of effective tax planning, for sure, it offers several benefits that contribute to the financial health of your business, because it's not just about reducing taxes, it's also about making informed decisions that support your long-term growth. So if we say, okay, let's make use of the bonus depreciation, we're making another decision there. The flip coin is that we're making an investment decision in whether we're buying an equipment, a vehicle, or we're doing some leasehold improvement. This is another decision. And if I want to do that, but I want to also make it tax efficient, that's where tax planning play a great role. It helps you with that. So we want to maximize saving, we want to avoid penalties, we want to manage our cash flow in an efficient way, especially when tax law changes from a year to another between 2025 and 2026. And some provisions, as we may have mentioned before, expires in a certain date, something like the bonus depreciation. You know that it is starting with equipment that effective January 2025. See how funny this is. So if you bought something from January 1st, 2020 till January 19, that doesn't go in this category, it wouldn't be subject to the bonus depreciation. Won't be able to take 100% depreciation on it. Of course, people would say, okay, I bought it on this day, but yeah, I did not put it in service before January 20 to take full deduction. I don't know why they make it hard, but January 20, the operations date. So anyway, this is just one example of how funny the tax code can look like. Okay, how would I time this? And that's why you need somebody to time it for you and to help you with all these different changes and timing differences. All right, and the last and ultimate goal is that we want to reinvest in growth. There are several tax planning strategies out there. Corporate tax planning really require like a multifaceted approach. Businesses can use these strategies to then minimize their tax liabilities while being compliant, as we said, but there is like some strategies where it would help you with your ordinary income that comes from your operations. And there are strategies that related to capital gain. And that's when it comes to, okay, you want to sell a certain property, you want to sell a certain asset. There are some strategies only for this part, for the capital gain, how to avoid the capital gain tax. And there are estate planning strategies that's in case of like you want to pass on your assets and your business to other generations. And we can't stress enough the business entity optimization, the type of entity that you have makes a huge difference in how much taxes you pay. And if you're in the wrong type of business, you may be overpaying taxes that you should not if you are not aware. So, and that's a common situation when somebody comes to me saying, okay, I opened this corporation, I opened this LLC, I opened this, and I'm like, to do the, to take deductions. I'm like, you know that, who told you that you need to do that, or who told you that this is the best strategy for you? For in a lot of cases, what was just recommended from other fellow workers or people that are in the same industry as you are, and they told you, okay, we did this. You don't just go and do like them, because your situation is different from their situation. So if they open a corporation, that doesn't mean that you also need to open a corporation. So you need to seek advice before you even start opening a business. And I go with that a lot. Like with the rental properties, a lot of people come say, okay, do I need to open an LLC to take deductions? I'm like, no, you don't. LLC is to help you taking the is to help you against the liability. It gives you liability protection, but it really does not affect the ability for you to be taking business deduction on your rental property. So certain things like that, it may cost you money that you do not need if you don't have a concern, of course. But there are different things. It's like a situation to situation basis. Everyone is different. You can come and say, okay, I heard that S corporation is the most ideal type of structure for me. Maybe for you, I would advise you just to be on a single member LLC. Maybe for you, I would advise a different type of structure. So definitely you need to check on your business entity structure to see if you're optimizing the situation for your benefit and for your tax saving. And then comes, okay, we started to operate. We need to start, okay, what are the deductions that are available to me to make use of to reduce my tax liability? We start talking about a lot of strategies, whether this home office deduction, auto expenses, bonus depreciation, Augusta rule, a lot of things from that perspective. And then comes capital gain strategies related to, okay, if I want to sell this, do I go through 1031 exchange? Do I establish a CRUD, like a charitable remainder trust, or do I establish something else? There are different strategies, depends on your goals. Estate planning strategies, whether you want to do some kind of insurance or some kind of a trust for that, that will incorporate like a financial planner to be talking with us about that. All right, so depends on your goals and where you are. And we take all of this and we incorporate it with your personal goals and with your personal tax situation. If you have a pass-through entity versus if you have a corporation that's separate from your personal, and what if you have some sort of a W-2 income, what do we do with that? Do I need to incorporate passive income or non-passive income? What would help me? What's depends on my income and my threshold and the law that keeps changing with these numbers, and it's indexed for inflation every single year. That's what would help me like know for sure what may work with me that I haven't thought of before. All right, so again, we have to stress that we are compliant with tax regulations, and that's why we keep monitoring the tax law changes. And we because we want to be in compliance. While maximizing tax saving is important, ensuring compliance with tax regulations is critical to avoid penalties, audit triggers, the legal consequences related to that. Adhering to the laws and keeping accurate, timely records is essential. The first thing I talk to any business owner about is to maintain accurate records. You need to have bookkeeping. You need to have your books in order. You need to have the right receipts for your expenses. You need to be on top of your filing deadlines, whether you're hiring people and you have payroll obligations, or you need to be doing some internal audit. Depends, of course, on the size of your business, but you need to be auditing yourself with other regulations you may need, with other businesses, you may need to even have an external audit. So to be in compliance with that is crucial to adhere to the laws and to maintain accurate and timely records, because it comes handy and supportive when you have an audit that comes 3 years or so after you filed your tax returns and you totally forgot what was going on. So you can't rely on your memory. You need to have supporting documentation. You need to have a backup plan in case you lost your documentation as well. That's the cost of doing business, but it's worth it. The role of professional tax advisors, of course, navigating the complexities of the corporate tax planning can be challenging without the right expertise. And it can not only challenging, but it can be very, very costly. Like doing this on your own, you would really be risking losing a lot of money. And thinking of this tax if you have the right people on your end on your side, that would help you save a lot. So you have to think of this as an investment rather than an expense. So you need to be partnering with professional tax advisors that help you ensure that your business implements effective, compliant, and cost-saving tax strategies too. I don't want you to go in a tax strategy that would cost you so much that you're not making use of the savings. Unless, of course, it's an investment that's gonna have a return on investment higher than what you put in there. So cost saving tax strategies is also something that we put in mind. So the right expertise can make it challenging to navigate the complexities of corporate tax planning. Partnering with tax advisors who are professional can help your business implement tax strategies that are effective, compliant, cost saving, and customly made for you. There are plenty of tax planning strategies out there, and not all of them can benefit you. So it has to be a custom plan to your needs, to your goals, to your own situation. And we can't stress that now more than ever, because of all that's going on within the Congress and White House and all of that, major tax laws are on the horizon. Our OBBB, the three Bs, one big beautiful bill, the raise, the deductions, the exemptions, they all are shifting. And waiting until the law changes, it leaves you with really fewer options and less time to act, because most likely not until September that this is gonna be a real law, but you have time to act now. You know what to expect. You know what you need to do. So you need to start planning from now so that you lock in the current benefits before they potentially expire. It's not just about compliance, it's about strategy, savings, and staying in control. That's the major thing that we want to talk about. We want to be in control. We don't want to just act after the fact. All right, so I want to thank you so much. Here are my contact information if you would like to start working together, if you want to review your tax structure, if you want to do an assessment for where you're standing, if you're paying the right amount of taxes, or maybe you could be paying less. Let's reach out. Let's have a conversation and we go from there. All right. Thank you again and see you soon. See you next week. Bye.